So hope you all having an awesome day. A quick one here on nat gas, gold, silver and crude oil, starting with natural gas. And what do we have right here out of natural gas? A massive push down out of the double top pattern right here, and we also had an entry report release that was more than expected. That was a significant difference from the last and previous report right here was minus 96, and that came almost half than the previous report, and it's more than expected, more than half we had this time, and that is bearish for natural gas. As you can see, the increase in natural gas more than expected is a weaker demand and bearish for natural gas right here. That could also possibly cause the price to push low. Let me show you what I've said in my last video so that we can understand conditions and entries. The price has just formed a nice double top pattern within this anchor level, so as expected and as mentioned in my last video that I'm expecting a good pullback and a good breather. Looking at this nice swing high candle, after that a pullback was expected. If you have seen my last video, that is what I've mentioned, that now we're going to look for our next buy trades. Now it's kind of good that we are getting this pullback, because for the next pullback entry I want to see a deep pullback to 50 EMA. That is very important. So I want to see a price with a deep pullback above 50 EMA or at 50 EMA, followed by bullish engulfing pattern. Now I'm expecting this pattern looking at this double top, and I'm expecting a good breather and a good pullback from here. Nice one. So as you can see in my yesterday's video, I've said that I'm expecting a deep pullback out of this double top pattern, and I also said that if you're an aggressive trader, the 50% can be your entry and stop loss can be below, and that can be risky as well. But for non-aggressive traders, we are still not broken below, completely below this anchor level and also below 50 EMA. Now there's times when the price breaks below 50 EMA and the very next candle close back above 50 EMA, and that will be a good signal that price will push up after this type of breather, a big breather, and forms a bullish candle. Now I will only start to look for my bearish trades once we are completely broken below this anchor level right here in green, and if I see another big red candle below 50 EMA, in that case I'll start to look for a bearish trades only. Otherwise, wait and see how it goes. Just one candle will not make me decide that I'm going to start to take my sell trade. I want to see one more red candle, a good bearish momentum, completely broken below this anchor level. Only then we'll start to look at the downside. For now, I'm still looking at the upside. After this breather, we can get another push up, possibly if the price will come back above and close above 50 EMA with the very next candle, or if we are completely broken below this zone, in that case I'll start to look for the downside. Otherwise, as long as we are above the zone, we are inside the zone, I'm still looking at price to push up if we are broken above 50 EMA. So I've given you both conditions. Keep looking for that. For bearish pullback trades, I want to see a break below, pullback, and then a bearish engulfers, and we're going to start to look for the bearish trades. If we are broken back above 50 EMA, I want to see a break above this anchor level, and I'm looking at this level I've already mentioned in my last video. So keep looking for that. Once we have a condition, we are good to go for our trade. The zone above, which is right here in case you missed it, is 2.033. That goes up to 2.169, from where we are looking for sell trades if we get a push into the zone above. Right here on capital.com, we are now at 50 EMA. Now there are times when the price is at 50 EMA. If you remember, I've said that we are allowed to break below 50 EMA once, and if a very next candle closed back above 50 EMA, in that case we have a bullish signal, and that candle must be bullish engulfing candle. If you close back up without a bullish engulfer, in that case I want to see a complete break and close above this side to start to look for my bullish trades till the zone above, which I've already mentioned in case you missed it. Right here is 2.164. That goes up to 2.314, from where we're going to look for our sell reversal trades. For now, wait and see how we have this candle close with the momentum below 50 EMA, good momentum. Only then I will look at the downside. For now, I'm not looking at bearish trades as long as we only have one candle close below 50 EMA, and as long as we are in this anchor level. Once we are broken below completely, in that case I'll start to look for my bearish trades. Exactly same here, right here, the anchor level below, which is something like this. Now at this point, same conditions, just want to give you the zones, which is right here. Mark these zones. If you have a good momentum, in that case I will give you the next level here to take our next buy trades from here. But for now, let's see how this candle close. Next we have gold. It's shooting up like crazy. So what we're going to do, we're going to move our Fibonacci tool exactly from the top candle to this zone something like this. Now, all I want to see, pull back to 50% retracement for aggressive entries, and then 1 ATR will be my initial targets if we have a pullback to this level. Otherwise, I'm only going to take my long trades if we have a pullback of few red candles followed by bullish engulfer above 50 EMA. Only going to take my long trades using 1 ATR for the targets. For now, have these levels on your charts in case of dramatic push down. This is a zone that will likely push the price higher again. For now, wait for the conditions. Once we have a condition above 50 EMA, pullback entry for your buy trades only. Silver has just hit the level of resistance. So right here is 24.26. That goes up to 24.66, a level from where now we are looking for a valid bearish trade. That's a bearish engulfing candle or double top entry pattern. Once we have these conditions, only then we're going to look for our sell trades, not a reversal but a sell trade that is enough to hit your sell targets before you exit and start to look for the next buy trades above 50 EMA. If the price hold above 50 EMA and give us a signal like bullish engulfing candle, in that case we are good to go long after this sell trade if we get a condition in this area of value. Remember, if there is no condition, we can still push higher. Make sure you see a valid bearish condition to take your next sell trade. Lastly, we have crude oil is still struggling to break above this box. Now at this point we had a double top in this box. Price did push down. For now, for my next buy trade, again I want to see complete break above this high. Once we have broken above, then we start to look at the level above, which is right here. Now I'm going to mention my level once we are completely broken above. Now on daily time frame, I want to see a complete break and close above. A body must close above this level to use this level as our trend continuations when bullish. That will likely push the price higher. For now, I'm still bullish for crude oil in long term, not looking for sell trades as long as we are above 50 and 20 EMA and as long as we are still inside the zone. Once we are completely broken below this low, only then I'll start to look for my bearish trades for crude oil. So keep looking for that. Once we have a condition, we are good to go for our trade. And remember, without condition, you are just gambling. And once we have a condition, only then we are investing our hard-earned money. Stick with that, follow your rules, and don't change your strategy if you get few losing trades. That's just a part of process and it's a part of trading. Hope you trade green rest of the week. See you guys in the next video. Have an awesome weekend. Take care.